This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
Let's talk about things to anticipate in this new year. Of course, we always say we don't have a crystal ball. If we did, you and I have joked before, neither one of us would be here on the radio this weekend. We would be
maybe the Maldives,
sitting on a beach somewhere in our private, forget Maldives, a private island somewhere.
There you go. That sounds even better.
But what we do have is history, and we can learn from the past and to understand how to better prepare for the years ahead. So we have seen such an incredible bull run, despite there's been a few bumps, but for the most part, the past over a decade now. And then the past 3 years in particular, we've seen the market up. So what's going to happen in 2026? Will it be 4 years in a row? Because as history shows, that's only happened 4 times in the past 100 years. Do you see a fourth up year in the market? And people are feeling iffy about it. A survey by T. Rowe Price shows that 50% of retirement savers believe there will be a recession in 2026, and 34% expect to keep working part-time when they retire just in case of that recession, Abe. However, if you ask financial advisors about 2026, most believe the market's going to be up 10% by year's end. Why the disconnect?
Well, I think one of the biggest reasons for that, Heather, is that we notice as advisors that, you know, a lot of clients and prospective clients and just America in general can kind of get caught into what the media is saying about the world at the time and what's going on in the environment, and maybe get wrapped in that too much and then start worrying and everything. So look, we're going to watch the news some more than others, but we don't want to let our emotions take over when we watch the news. We want to focus in on our own plan. As an example, back in 2022, when the S&P 500 was down almost a negative 20%, we met with tons of people that year, and there were plenty of people that we helped to retire that year when the markets were down 20%. Why? Because even though the markets were down about 20%, the S&P 500 at least that year, it didn't matter, because remember, we had such a crazy bull run all the way up into 2022, right? People had done so well up until that point, and so many people we met with were still able to retire even in a down market. Now, there's obviously people that would put off that decision and wait for the markets to come back. But the point is, a lot of times, and for a lot of people, I think, we need to tune out the noise and focus in on our own personal financial and retirement plan. And, you'd be surprised. You're probably in a better financial situation than you think you are. But you need to have it analyzed and checked out. And we find this all the time. Example of it right here. We just helped a couple out of Haymarket, Virginia, and they're in their mid-60s, retiring in 2 to 3 years, about maybe $2 to $2.5 million, 60-40 risk, 60% in the market, 40%. They wanted to be more conservatively invested. 24 to 36 months out away from full retirement, taking on too much risk. They wanted to come down to that 60-40. Big pile of money and accounts, I think 10 to 15 accounts between a husband and wife. No direction, and unsure if they could and when they could retire. Unsure if they could retire and when they could retire, if so.
Okay.
Wanting to put a firm plan in place to do so. Retirement plan implementation is as simple as that. That was a solution for them. Put together a comprehensive retirement plan, a retirement parachute. Like when you are retiring and you have the amount of money saved that you need to retire to get that money to last you the next 30 years of your life, you need to start thinking much more about protection and preservation, because you don't want to go back to work, right? That's why people hang on to their jobs a little bit, because they're concerned, what are the markets going to do? Do I have enough? I'll just continue to work part-time for a few more years just to make sure that I can fully transition in retirement successfully. You need a parachute to safely help you land and transition. You need protection, preservation mixed in to protect you against the biggest risks that can affect your life savings. A risk reduction was one of the biggest things we helped them with. We broke their portfolio down by providing them an analysis in simple terms to help them understand and digest all the pros and cons of all of the assets and investments they had built over the last 40 years. By understanding what they had and by understanding the direction and the actions they needed to take as they transition into retirement, that can help someone, and it helped them to take action and set up a new plan. So one of the biggest things we did when it came to their investments and helping them understand the investments was to provide that analysis. And we call it a portfolio X-ray, a 401k X-ray, TSP X-ray. That's what we want to provide our listeners right now. So if you're 55 years old and older, you save $500,000 or more for your retirement. You say, you know what, Abe? Number one, I don't have a retirement plan. Number two, I'm not quite sure what I have in my investments, if I have any, if they're too costly, if they're the right fit for me going forward. I'm not positive. I'm not 100% confident in what I have today, if it'll last me and if it's the right fit for me. Pick up the phone right now. We want to offer you the same 401k TSP 403b analysis complimentary.
Abe, let's keep on the conversation about market investments because it is a different world this year for savers and investors. The Oracle of Omaha, Warren Buffett, he has finally decided to retire. Although I feel like his idea and definition of retirement is probably very different than the rest of ours because even though he's no longer CEO of Berkshire Hathaway, he's still on as chairman. So he hasn't officially hung it all up. But it's interesting because he's been in the game for so long and he is, I think he's 94 years old.
Yeah, he's in his 90s. What a legend.
What a legend, to say the very least. And the fact that his lessons, his sayings, his beliefs, many believe are more relevant today than ever. So let's talk about some of the Buffett rules of saving and investing and what we can learn from those as far as our own investment success.
Yeah, here are 5, lessons from Warren Buffett. So, number 1, make time work for you. Compounding is the retiree's best friend. And man, especially if there are any of you listening right now that are in your 20s or 30s, listening to the show right now, please listen up and take advantage of this because you really have time on your side. Compounding is a retiree's best friend. Compounding and tax deferral. They say that's the 8th wonder of the world is compound interest. Trust matters more than predictions. Buffett cared less about economic forecasts and more about people. For retirement savers, that means choosing advisors and funds with transparent incentives and a track record of acting in your best interest. Keep it simple. Number 3, complex investments. We see this all the time, Heather, where people have illiquid investments. They don't understand them. They're losing money on them. Complex investments often hide risks and create false confidence. If you can't explain an investment in plain language, it probably doesn't belong in your retirement plan. Build guardrails against regret. Number 4, you can't replicate Berkshire, right? Warren Buffett's company, but you can set rules, automate contributions, max out your 401ks, diversify, avoid knee-jerk reactions to market swings. Remove emotions, right? Temperament, number 5, temperament beats talent. Retirement success is not about IQ. It's about emotional control. We talk about this all the time on the show. Staying calm when markets surge or sink is your edge because we know they go up and down. Because we know it's healthy and normal for the stock market to go up and down. We need to have a laser focus on our long-term retirement plan, not what's going to happen in the next 6 months, next year or 2.
Right.
We just helped a couple out of Rockville, Maryland with about $3.5 million, early 60s, not even at Social Security age yet, a 70-30 risk, tons of accounts, that common financial juncture, over 10 accounts between the husband and wife. And in this case, as is so often the case, only the husband knew where all the dollars were, where all the accounts were. And
that makes me feel Abe.
And the wife really didn't understand and wanted to simplify and consolidate because it drove her crazy. Like he had total control over like an understanding of where the accounts were, how the dollars were invested and things like that. But what if something were to happen to the husband?
Yes.
This happens all the time.
Happens all the time.
I will say, this is one of the biggest reasons, one of many reasons why couples come in and why husbands want to set up the plan for the couple and especially for the wife because, hey, us men are probably going to pass away sooner than our wives, right?
Yep.
We don't live as long as women. So in addition, they had accounts with 2 to 3 different advisors where they're getting opinions that differed, competing opinions, and each advisor was competing for their business, so they were getting pulled in each one of these directions.
Yeah.
It just wasn't healthy. It's certainly not efficient. We put together a comprehensive phase 2 retirement plan. We consolidated all those accounts together into one well thought out, actionable plan. We streamline everything together. Can you imagine just like how much de-stressing, like how much how much less stressful this is.
This has happened to me. I can speak from. I had a bunch of 401ks at old employers, and I finally got everything. I did a few years back, but I remember that day, like getting off the phone with the person I was working on with, and I finally had everything under one roof, and I felt great.
And you can easily lose track of a 401k. This happens oftentimes too. And 401k custodians and insurance companies change names. They get bought out. They get sold. And it becomes even harder to track down an account.
Yep.
And so by pulling the resources under one roof, you gain a lot more efficiency, clarity, and added confidence. That all comes with a comprehensive Phase 2 retirement plan. One roof, one firm, no competing opinions. Keep things simple. Make sure you protect against the risks that can destroy a great financial plan, and work with specialists that are in Phase 2. Work with retirement planners that specialize in helping baby boomers retire successfully. If you're 55 years old and older, you've saved $500,000 or more in readily investable assets that are able to be managed for you. Pick up the phone right now. We want to offer you the same comprehensive Phase 2 retirement plan, complimentary.
One of the many reasons people are doing Google searches, Abe, is they want to know more about their savings, their 401ks and their TSPs here in Northern Virginia specifically. So we talk all the time on this radio program and your radio commercials, the idea of a 401k or TSP X-ray. And that you've done hundreds, if not thousands of these over your career at Abich Financial Services.
Sure.
What is it that you are looking for in this X-ray process? And what do you do to help people better position themselves? What can they learn from this?
Yeah, that's a good question. Well, there's a lot we're looking for in the reports, but to keep it simple, before someone makes a decision to potentially change their investments, they should really understand what they have, right? Yeah. Well, if you and your husband come in, Heather, and you tell me that you've got $3 million and you want to be a 7 risk with us, right? Like a 70-30 portfolio, but you really have 90% of the stocks, you would need to know that. Yeah. You would want to really understand what you have. Just like getting a second opinion on anything, building a deck, getting a new car, some big purchase, you want to hear what 2 or 3 people have to say and really understand the pros and cons between your opportunities. So in the portfolio X-ray reports, we'll truly tell somebody, hey, here's who you are on paper. They'll send in their statements, their holdings. You've got 90% in stocks and 10% in bonds, or 60% in stocks and 20% in bonds and 20% in cash. And of the stock holdings, X amount is domestic, X amount is international. You have short-term bonds, long-term bonds. Here's what your risk measure is. Here's what your cost is. Here's what your potential up is. Here's what your potential down is. A stress test. If we have another 2008, how would it compare to the S&P's loss? Some people's potential losses are greater than the S&P 500's loss in 2008, which was a negative 37.
Wow.
And Heather, if you continue investing the way you're investing right now, do you realize you could stand to lose 40 to 50% of your life savings? Do you understand that?
Right.
Also, if the markets are up, you will get most of the upside. I mean, it all depends on what someone's invested in, but we go over all those details to truly help someone understand what they have. That is a portfolio X-ray, and we'll do that on specific accounts like 401ks, TSPs. We'll also do it on the whole plan, which is really important. Yeah. We just helped a couple in Leesburg, Virginia with this. They've got $3 million retiring in just a few years, a collection of accounts, 401ks, IRAs. We did the analysis. They truly understood where they are today, side by side where they want to be, and we can help them with where they want to be as they transition into retirement. And this couple was able to make an educated decision and say, okay, here's what my costs are. Here's what my fees are. Here's what my ups and downs are. Here's where Abich would put me. Here's the comparison, side by side comparison, so they can make an intelligent, educated decision. And they decided to implement the plan with us, right? You're either going to stay the course and not make a change, or you're going to make the change and realize, I need a plan that's more appropriately suited, better suited for me into my 60s, 70s, and 80s. I'm not 30 to 40 anymore. I can't stand to lose 20, 30, 40% of my $3, $4, $5 million at the point of retirement, or especially 5 to 7 years into retirement. That would be the worst. You'd have to adjust your lifestyle.
Yep.
If you're listening right now, you have a 401k, a TSP, a collection of accounts. It could be IRAs, SEPs, whatever you have. You want an analysis on an account, on a position, on your entire plan. If you're 55 years old and older, you've saved $500,000 or more for your retirement, pick up the phone right now. We want to offer you the same 401k or TSP X-ray that we offered to this couple in Leesburg, Virginia, complimentary.
Abe and his team, they're here to help you do that. So it's theretirementkey.com to start the conversation, or you can just click on the links we've got posted in the show notes.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com and join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.